Emerging markets are seemingly never letting up. The weakness prevails and could easily spill over into the more developed nations. With weak currencies, commodities such as oil become very expensive. This translates into higher gasoline prices, higher food prices, shortages, restrictions, and brewing tensions. Many levels of problems are building up right now. You came here for the truth, so let me unveil that for you. Today we're going to look at what's going on in emerging markets. I'm going to connect that in with the United States as well. There's a lot to cover here. I've been doing so throughout 2018, showing you what's happening with the currencies, with the markets, and of course everything interconnected in with that. This right here is something that I show you as often as I possibly can. This is the best and worst performing currencies. And you can see at the bottom of the list, the Argentine peso has been battered 53%. We are looking at the worst performing currency of the year. Now you look at the Turkish lira, which is down 36%. It has changed, and I'm going to show you why in just a second. We also see the Brazilian real down nearly 18%, South African rand, Indian rupee, and so on are all beaten this year throughout 2018. Now, I'm going to show you these three charts in a row, which is basically the total return performance of major global financial assets. In this case, we're looking at the year to date. All right, this is measured in their local currency. So looking at the Argentine peso and the Turkish lira on the right-hand side, they are definitely the worst performers of the year. But I want to focus on one just to the left of that, and that is copper. Now, it is said that copper is a leading indicator of a recession. You have to imagine industrial commodities, countries are importing them, businesses are importing them. There's a need for industrial commodities when buildings are going up, when business is booming. But suddenly, if things start to slow down, you will see that diminish. And that appears to be happening now. We're going to see if it's a much longer trend, longer term trend. But I'm just showing you this because I think it is quite significant. I've shown you charts previously to this, and I think that this could be something that we need to watch out for. All right, so also in the negative territory is the currencies for emerging markets, the equities, the bonds, and so much more. So we are seeing emerging markets throughout the year. Definitely, they've been battered left and right. Now we're looking at the second quarter, and you can see similar data here. Whether we look at the Argentine peso and the Turkish lira on the right-hand side, there are others here, but really what I wanted to get into is this. In September, things have really changed. Argentine peso still on the right-hand side, but look at this. The best performer has been the Turkish lira. So it's up about, let's say, 7 or 8% at this point, and things have really changed in the short term. But I want to see this change in the long term. I want to see the strength, but we're not quite there yet. But I do think it is quite significant to see where we have gone in this short period of time. I will continue to cover it, and we're going to look at that. There's a lot of talk about the Turkish lira, about Turkey right now going on, and generally we see a lot of noise and a lot of rhetoric and not a lot of action. So I'm going to cover it. I'll bring it to you as time goes on. Argentine international reserves. This is one country that received the biggest bailout in IMF history, which started at $50 billion. Then they decided that would not be enough, so they added another $7 billion on top of that. Why not, right? Just a few billion extra. So you could see how they intervene in the market, pumping up their reserves. And what do? Immediately, it gets evaporated. So if you don't understand how the IMF works, I wrote about it in both my books, but basically think of it like this. I drew sort of a pie chart, and these are your taxes. So think about this. These are your taxes that you pay, and a small percentage, which you're not allowed to know about, goes to the IMF. Okay, so the IMF gets your money, and then they pile it all up, big pile here. All right, that's your money. And my money and everybody else's tax-paying money. And then it goes into international reserves Perhaps that's from Argentina, perhaps another country, and they end up doing what they want with it. And of course, the IMF has say in that country, but let's just take it for what it is here, and they may just evaporate it. You don't have a choice. That's why I don't like this scheme, because our tax dollars are being used in things that I don't agree with, being used in places that are, let's say, begin 30,000 feet up in the air, and then they're dropped from airplanes, causing destruction that I don't agree with, and then they get used in this way. Financial destruction as well. Emerging markets double whammy. Expensive oil, weak currencies. So this is a very important thing to understand, because we are talking about the reserve currency of the world, the US dollar, and you have to figure what's happening here is not just what's going on in one particular country. It's happening widespread. When we have a strong US dollar, that's going to be a big issue for basically all others. Now, weak currencies are good for exports, so it has to be weighed. Emerging market countries and central banks are driven to act as crude climbs to 4-year highs. And you could see this priced in Turkish lira, how significant this has been. Of course, you could see it letting up to some degree, but I mean, come on, look at how it has been going on throughout 2018. This is looking at India, looking at Indonesia also suffering. All right, so beginning here in the article, emerging market countries and central banks are being forced to act. India, the world's third biggest oil importer, is weighing temporarily limiting oil imports. Brazil and Malaysia have introduced fuel subsidies. I hate those. On Thursday, central banks in Indonesia and the Philippines raised interest rates to tame the rising inflation. All right, so we've got a lot in here. I want to get to it, but basically look at the way that the central banks and the government act. Okay, we're going to print a lot of money. All right, we're going to give taxpayer money into this one area that we decide is the right thing to do. It's always the wrong thing to do, but hey, what do I know? In South Africa, where fuel prices are at a record high, the central bank said that the impact of elevated oil prices and weaker exchange rate on domestic fuel costs is increasingly evident. Emerging markets have already a lot of problems as it is, and when you throw on an oil price spike into the mix, that creates another big risk factor. This is exactly what I've been telling you now for several months, and now it is being compounded. Now you can see the central banks acting. I've been talking about this, and there have been, some criticism, but I'm still going to bring it to you. I don't care, because I can see it happening, and it doesn't take a genius to figure it out. All you need to do is understand history and understand how that applies until today. You could see they're talking about Turkey, India, Philippines, South Africa, talking about the imports and so much more, but I have to move on to this. India and Italy have the worst bad loan ratios among the top 10 economies. What really worries me today, not just India, of course, but that is significant, is Italy. And this is one country that we all need to have our eyes on. Wherever you are in the world, keep your eyes on Italy, because this is one country that holds billions and billions of dollars worth of risk all associated with it that could easily make its way out into every other country, not just in Europe, but also all around the world. It will spill out. Okay, it's not just Greece that has issues. It's not just, wherever that you hear in the news. Italy is a very, very prominent factor. China's manufacturing, the PMI, you could see it here, has declined throughout 2018. But this has been coming down for years anyway. But I just wanted to show you that it seems to be coming down. That is a worrisome factor, because China it's always trying to get its production going and so on. So keep your eyes on that. Biggest export trading partner. You could see what has happened with NAFTA. I'll show you more in a second. But wanted to give you this chart here. Canada clearly is intertwined at so many levels with the United States, both beneficial to Canada as well as beneficial to the different states in the United States here. And you're looking at that. I mean, it's so obvious. Ontario is most intertwined, I could see anyway, because you could look at it. I mean, 87% of the exports are going to the US. So it's a significant trading partner. If you put tariffs, if you put anything like that, it's definitely hurting the Canadian dollar. You're also going to hurt the economy as well. So that's interesting. It would have been good to see how that would really affect the economy here. We could use a significant decline in housing prices, I'll tell you that. 10 things to know about the NAFTA deal. If you want to know about the NAFTA deal, check out this article. It's out of the Wall Street Journal. I will have it in the description, but I'm going to end the video there. I think it's important to understand what happens in emerging economies as you can see them taking place today, the geopolitical tensions, the geographical diversity that's there, and how that all plays out in daily events. And then understand what could occur with the United States. We're already seeing somewhat to some degree, but I want you to focus on that definitely and be able to make assumptions as to what's going to happen so that you can hedge your bets. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel. I do appreciate that very much. And last but not least, if you want the financial education that you are not taught in school, these two books have it all. Everything from A to Z. You will get it, and you can check them out at the link in the description of the video. If you're more interested in the audiobook version, you can get that at themoneygps.com.